Oil prices edged lower in early trading on Friday but remained on course for weekly gains as investors continued to monitor the escalating conflict between the United States and Iran and its impact on global energy supplies. Brent crude futures slipped 6 cents, or 0.08%, to $76.24 per barrel by 1:25 Greenwich Mean Time, while U.S. West Texas Intermediate (WTI) crude fell 4 cents, or 0.06%, to $72.04 per barrel. Despite the modest decline, both benchmarks were still set to post weekly gains after heightened geopolitical tensions pushed prices sharply higher earlier in the week. Markets remain focused on the ongoing exchange of retaliatory strikes between the United States and Iran, which has disrupted shipping through the Strait of Hormuz, a vital maritime choke point that normally carries around 20% of global oil supplies. The latest escalation follows the collapse of a short-lived ceasefire agreement between Washington and Tehran. The conflict reignited after the United States and Israel launched coordinated strikes on Iranian military and nuclear facilities, prompting Iran to retaliate with missile and drone attacks targeting U.S. assets and commercial shipping in the Gulf. Although the Strait of Hormuz was partially reopened, renewed attacks on oil tankers have slowed the recovery in maritime traffic, raising concerns over global supply disruptions. At the same time, investors remain concerned that higher inflation and slowing global economic growth could weaken fuel demand. Minutes from the U.S. Federal Reserve's June 16 to 17 policy meeting showed officials remained concerned about inflationary pressures, although they expected labor market conditions to stay relatively stable. New York Federal Reserve President John Williams also said he did not expect energy prices to remain elevated for the rest of the year despite renewed hostilities in the Middle East, suggesting supply conditions could gradually improve if tensions ease.